Morning. Good morning. I'm Scott Montner. Just welcoming you to How to Sell Your Business, Buy, Sell, or Hold. We're going to just give people a few minutes to join. So I'm just going to mute and we're going to wait a minute or two as other attendees log in. Thank you. Hi, as people are joining, I'm just letting you know we're waiting a minute or two to allow other. Hi, as people are joining, I'm just letting you know we're waiting a minute or two to allow other attendees to join. We'll be starting shortly. Other attendees to join. We'll be starting shortly. All right, I think we're good to. All right, I think we're good to go. Good morning, everyone. Afternoon at this point. Welcome to session 4 of 7 in How to Sell Your Business, Buy, Sell, or Hold. And today's topic is what do buyers look for. Our next session, so everyone will know, is session 5 is on December 2nd. We have a great panel of participants this morning. Good morning, everyone. Afternoon at this point. Welcome to session 4 of 7 in How to Sell Your Business, Buy, Sell, or Hold. And today's topic is what do buyers look for. Our next session, so everyone will know, is session 5 is on December 2nd. We have a great panel of participants this morning. We have Janine Buss, who's president and co-founder of Growth Terra. Growth Terra is a company, and Janine helps B2B technology organizations grow and scale and set the stage for successful investment or exit. She works with sales, marketing, and customer success leaders. We also have Matt Foreman, who's tax counsel to Chisa Shaninin and Chiatamasi. Sorry, Matt. Matt focuses practice on all aspects of tax issues related to business formation and operation, raising capital. We have Janine Buss, who's president and co-founder of GrowthTerra. GrowthTerra is a company, and Janine helps B2B technology organizations grow and scale and set the stage for successful investment or exit. She works with sales, marketing, and customer success leaders. We also have Matt Foreman, who's tax counsel to Chaisa, Shaninin, and Chiatamasi. Sorry, Matt. Matt focuses practice on all aspects of tax issues related to business formation and operation, raising capital via debt and equity, and acquisitions of sales of businesses. He's focused and advised on Fortune 500s, closely held businesses, real estate investors, and high net worth individuals. We also have Jackie Kopko, who is founder and managing partner of Big Branch Capital. Jackie has been a private investor, and she is actually in via debt and equity and acquisitions of sales of businesses. He's focused and advised on Fortune 500s, closely held businesses, real estate investors, and high net worth individuals. We also have Jackie Kopko, who is founder and managing partner of Big Branch Capital. Jackie has been a private investor, and she is actually in the process of buying privately held companies at this time. She's worked in consumer products, financial services, healthcare, and technology industries. We also have Mary Greco, a partner at Ocean Froma Wolofsky. Mary is an intellectual property lawyer focusing on assisting clients with the development, management, and protection of their brands. She's represented clients on both the buyer and seller side, performing due diligence and readying business for companies at this time. She's worked in consumer products, financial services, healthcare, and technology industries. We also have Mary Greco, a partner at Ocean Froma Wolofsky. Mary is an intellectual property lawyer focusing on assisting clients with the development, management, and protection of their brands. She's represented clients on both the buyer and seller side, performing due diligence and readying business for purchaser, sale, and small transactions to $500 million deals. We also have as my co-moderator Gary Rosen, who's the partner in charge of valuation, forensic, and litigation services of Markham CPAs. He provides accounting, audit, and consulting services, including solvency, valuation opinions, and asset recovery for closely held and public companies, private equity funds, government agencies, international corporations. Deals. We also have as my co-moderator Gary Rosen, who's the partner in charge of valuation, forensic, and litigation services of Markham CPAs. He provides accounting, audit, and consulting services, including solvency, valuation opinions, and asset recovery for closely held and public companies, private equity funds, government agencies, international corporations. I am Scott Mautner, and I am a startup and M&A lawyer. Focusing on corporate transactions, and I'm counsel to Tanaka and Monk. So without further ado, I'm going to turn to the next page on the presentation, and it's what do buyers look for. So I'm going to turn this over to our panelists and take it away.
Thank you, Scott. I think we're going to start by talking about the first thing that is something that a lot of sellers often forget to think about. And selling a business is like selling anything else. There's an emotional side to the sale as well as the rational side. And we spend a lot of time thinking about all of the rational elements, and we're going to talk a lot about those as we talk today about what drives the value of the business and the red flags. But getting the best value for the company means getting buyers excited about your company. And that means that you really also have to appeal to the emotional side. as well. And so how do you do that? How do you get them excited and interested? Well, you have to tell a compelling story about your business. And, as I said, this is often underestimated. People keep thinking about the data because we are so data driven in today's world, but it really is, as human beings, we are drawn to stories. And in fact, we will remember stories, and stories will have a much stronger impact than even the data. So what goes into your story as you're thinking about selling your company? Your story should include the big picture as well as that relevant data. And you want to think about what you would want to see written about your company. Think about the company's history and your accomplishments. Why did you start the business? And how are you really helping customers? How are you adding value? How are you making a difference in the lives of your customers? And how are you really making a difference in creating value for your employees and suppliers? What was key to your success? Did you have to overcome anything? This is trying to create that compelling story, but don't just stop at where you are today. This is something that we see a lot of companies sort of think about. I'm thinking about selling the business, and so my story is going to end here, but it doesn't, because it's not done till it's done. So your story should also include your vision about the future and what you are, what you see as the opportunity and how you're going to continue to create value, because your buyers are going to base that value in terms of not just what you've done in the past, but also what you're thinking about in the future. So when we work with companies, really helping them to tell that story, to make sure that the buyers know that there is that great opportunity there, that they know that the seller has a plan in place in terms of how to capitalize that and how to keep that business growing and how it's going to add value to the buyer. So what's really important is to also tailor the story to the buyer. So make it clear why the buyer should do the deal with you. If your buyer is a strategic buyer, you want to focus on how buying your company is going to help them and add value to their business. How are you going to help them grow their business? How are you going to help them expand their product offerings, portfolios, their IP portfolios, their market position, competitive position? If your buyer is a financial buyer, really focus your story on the potential of the business to grow and generate a handsome return for them in the future. You really want to get them excited about that story. And it's not just for the buyers. Ultimately, and we'll talk about this as we go through and talk about what happens on the road to the deal, but your story is also important for your employees and suppliers and everyone else, because it is your opportunity to manage that narrative and to talk about what you want to talk about. And it's never too early to work on this story. Even if you're not planning on selling immediately, you want to think about what is a story that you want to have told about your company in the future, and what will it take to get there? I know entrepreneurs who are thinking about selling their company in, a few years, and they're already thinking about what that story is that they want to tell, and what is it going to take in order for them to get there so that they can maximize the value that they can get for their company. So, and if there are buyers in the audience, telling a story is important for them as well. You need to be able to understand what your sellers are looking for and also get them excited about why you're the best option for your buyer. So this is the kind of step one in terms of thinking about the high level narrative. And I think this is, buyers want to see that. They want to know that they want to get excited about your business, and you want to differentiate yourself from the others. And then the rest is about really thinking about those key elements and the value drivers of the business. And so I'll stop there. And I just want to let people know that if you have questions, please feel free. Please put them in the chat box or the Q&A box, and we'll answer them. And we'll try and get to everybody's questions during or at the Q&A at the end of the session.
Thanks, Janine. Excellent points. Jackie, I'm going to go to the next slide here, and if you would talk about what's drivers to your business valuation.
Yeah, great. Now, Janine, thank you so much for that. And right, the big part of this is understanding that there are different types of buyers, and those different types of buyers are looking for different variables within a company. It could be a roll-up strategy, diversifying a portfolio, looking for a single business, right? So everybody's looking, for certain things that are going to balance their risk and reward. However, there are some key points that all buyers look for, all sellers should be cognizant of, because those are, some main points that really drive the acquisition. First and foremost, we're talking about financials, right? Everybody wants to look at the financials. Are revenue sustainable? Are they growing? What does the cash flow look like? And I would love to turn it over to Matt to tackle this and talk about everything from high level quality financials to taxes.
Yeah, thank you, Jackie. I think the important part of what's going on here with financials is talking about the different, how businesses are different. There are a number of businesses that, service businesses are going to be much more looking at specific financials, what's the growth, things like that, versus businesses that are R&D heavy. They're producing a product long term. And when looking, driving the value of the business, you're going to look at, the specific business, right? Everyone wants to see a lot of money. Everyone wants to see a huge cash flow, but it's also, is it seasonal? And when you're reviewing it, particularly, in my context for tax, you look at, do the financials match the tax documents? And also, is there anything big picture missing from the financials? Should they be collecting sales tax? Are they collecting sales tax? Things like that. And do the tax returns make sense as they've done right? And sometimes it's having the right advisor, but sometimes it's having someone who's operating their business well. And now back to you, Jackie.
Yeah, thank you. And I would say a key thing with in terms of the financials, buyers and as a buyer, we understand that, there might not be, perfectly audited financials, and that's okay, right? I think that's kind of a relief for everybody, but they need to be clean. They need to be done properly. I always say it's okay if you have, your spouse or your kid on the payroll. You just need to tell the buyer that so we could understand kind of what the bottom line looks like. So, in terms of financials, they don't have to be perfect, but they have to be prepared, anywhere from 3 to 5 years historical with some projections in there. And then, in terms of customers, Janine, this is right up your alley, right? So I would love to kind of hear some things that you work with companies on in terms of looking at customers.
Yeah, thanks, Jackie. Customers are really the core value in the business. And as you're thinking about what buyers are looking for, is they're going to be looking for things like, if it's a strategic buyer in particular, how much customer overlap is there going to be? They want to make sure that you have a solid customer base that you can drive the business forward with, and they want to make sure that you also have good customer retention. Because we'll be talking about some of the red flags in a few minutes, but they're going to be looking at, do you have a solid customer base? Are you retaining your customers? Are you growing your customers, right? And which segments are you growing them in? Do you have customers only in one segment? Are they concentrated are your revenues all concentrated in 1 or 2 customers, or do you have a good diversified base of customers? Do you have all of your revenues, or which segments are they coming from? And where are the opportunities for growth? They're going to want to be looking at, as I mentioned in your story, thinking about where is the growth going to come from in the future, and what is it going to take to get there, and what programs and how are you going to put things in place in order to drive that growth?
Yeah, and in terms of speaking about retention and customer retention, I mean, maybe let's talk about people, right? Because I know that's a huge thing that people look for. What is the mission of the company? What is the employee retention? I mean, how important are people when people are looking at companies?
Well, I think that's really critical. People are what drives the business, right? You rely on your people to make the business successful. And so it depends on a buyer, right? So your front office, particularly from a customer point, your sales and people are going to be critical. And as a buyer, you're going to want to know that you have those salespeople that are going to stay and be able to continue to drive the business forward. So people are critical on the sales side. And if it's a strategic buyer, they're going to be focused on the sales people, the marketing people, but not so much perhaps the back office people, because they're going to be rolling it up into another business. On the financial side, they're going to care about all of the people. They're going to care about the management team as well, and care about retaining that management team, because again, they want that business to be able to drive as much value going forward as possible with as little interruption as possible.
That makes sense. Yeah, and I think kind of combining those two, the importance of brand and reputation, and I think this is something that people may take it for granted. But, branding and reputation, it goes way beyond your logo, right? You're talking about how your customers see you, how your employees see you. This creates, quality, sustainability, value within your organization. And it's, when customers recognize your brand and they know your reputation, right? This actually creates sustainable sales. It creates word of mouth marketing, which is, something that everybody looks for. Industry credibility. And when your employees are happy, and they have stayed on board, buyers do look for that, right? Because it is, although these are kind of qualitative business drivers, they absolutely drive and affect sales and growth. And the other part that you said, Janine, too, is just, making sure that there's, an operations and processes in place. And this is one thing that I very much like to look at. What are the operating procedures? Is there employee training? What's the quality assurance, processes and systems? Communication, right? This is a significant risk mitigator for buyers, right? For example, I come in and I buy a parts manufacturing company. The day of the announcement, Monday morning, I'm up there with the seller and we say, we're excited. This is going to be great. Everybody, it's business as usual. And the head of production says, you know what, I'm done. I see you, right? I'll see you later. This person has 30 years experience. All the information is in their head. We have to get that out. And so instead of coming in and having to create this, new process, we go to the process system, we slot somebody in there, and it's a quick turnaround. And the same with products and service, right? I mean, we want to make sure that this is the foundation for financials. This is a foundation for people, for customers. What is the driving criteria of your product and service? And as a seller, you really should be able to explain this, 10-second elevator pitch. Don't make your buyer guess kind of what the value prop is. So it should be, what is it? What does it do? Who do you sell to? Why does this industry need it? And how is it going to grow? But, Mary, I'd love to kind of hear from you, especially kind of on the assets and the IP side and the importance of those things when it comes to products and services.
Yeah, thank you, Jackie. First of all, I can start by saying that every business has intellectual property, even a business that may not think they do. Business has a name, and as Janine and you, Jackie, were talking about, the name and the brand is extremely important, and often that's what a buyer is looking to buy. They want to buy that goodwill. They want to buy the name. They want the history of the company. That's very important. And then there's other companies they're very heavily IP intense, such as a technology company. They have a lot of IP. A company that has a lot of formulas and techniques and inventions. Companies can have a lot of patents, mechanical patents and pharmaceutical patents, and just, endless. And then also companies can have a lot of trademark. Especially a consumer goods company would have trademarks, or have a very big trademark that's important to have protected, not only in the US, but around the world. So what buyers typically look at when they're looking at the IP is, first of all, how important is the IP to the business? And secondly, is the IP protected? Sorry, I have a cat here. Is the IP protected, and is it protected around the world, which is sometimes often overlooked, but it can be important if a company does business outside of the US, or intends to do business outside of the US, or has manufacturing outside of the US. These things are very critical and very important. And one other important thing I want to mention as an asset of the company is the customers, the customer list, the customer base. And in today's world, data privacy is extremely important. So customer lists, the contact information for customers, email addresses, other things that companies have collected about customers, it can't no longer just be shared easily with a potential buyer. And sometimes, and I've been in a deal where a customer list, and it was a very huge list of customers, there were questions about whether or not the seller could actually share that list with the buyer because of the way the seller had collected the information. Consumers who the information was being collected from. So there's a lot of things that may not be readily apparent that become very important to a buyer, and it really depends on what the buyer is looking for, how important the IP is, how important the customer list is, and other considerations like that. So thank you.
Awesome. That was really informative. I am going to throw out something I want the panelists to think about, and we'll pick up in the Q&A at the end. But do any of these factors change whether you have a strategic versus a financial buyer? It's all of these, obviously these different factors drive value, but is the actual buyer make a difference? So in that regard, I'm going to ask Matt Foreman to discuss red flags or potential red flags in any transaction. So Matt, I'm going to turn it over to you.
Thank you, Scott. In terms of red flags, I always, the way I look at it is a lot of red flags. I had a former boss who referred to them as Franz Ferdinand, which, as everyone knows, he was the Archduke, I believe, who was killed in the spark that started the Second World War. And obviously he wasn't really what caused it. There were embers burning and little things, and he was kind of that last spark. And some red flags can be so large that they're a non-starter. Anyone who's been involved in the deal has seen that. But also sometimes it's just a matter of different small red flags suddenly becoming a real problem. In terms of financials, I know I spoke about some of them before, but understanding, if you look at it, and I know a lot of us have seen this, and there's just not good financial controls. The books are sloppy. The tax returns don't seem to make sense. You're not sure they're filing in the right place. You don't have consistency between them, or just someone who's really doesn't seem to be on top of what their financials are can be a real issue. You ask them, hey, what states are you operating in? And they're like, oh, just New York. And it turns out they have, millions of dollars of sales in another jurisdiction, or they don't know their margins. Everyone who's ever watched Shark Tank, they always talk about, what are your margins? What are you making? What's your gross product margin? And someone who doesn't know that, those basic financial questions, those are big red flags. There are a lot of other ones. Obviously, you can see them here. In terms of customers, what are the customers and what's important? I believe that's Jackie, or is that Janine? I'm not sure. I think that's Janine.
I think we can
both do it.
Yeah, we can both jump in. I think, just on the customer side, one is, as we talked about earlier, is retention. I mean, you want, especially in today's day and age, and if you've got any kind of a customer that, we do a lot of work in the technology side where you've got subscription. Anybody that's got subscription revenues or any kind of customer base, you want to retain your customers, because that's how you're going to grow. It's a lot more expensive to acquire a new customer than it is to retain an existing customer. So buyers are going to be looking for, are your customers happy? Are you keeping them? Are you serving them? They're going to be looking for, so if they see a lot of churn, that's going to raise some flags, and they're going to wonder about what's causing that. Customer concentration is a big one. Mentioned earlier, how do you have a couple of big customers that you might call whales that are, making up the majority of your revenue. And the risk there is, if one of them happens to leave, and if they don't like the deal being done, that they're gone, it's going to have a huge impact on the financials. And so you've got concentration in terms of the number of customers. In today's COVID world, the other thing that we see in working with companies is looking at the concentration in terms of industry segments. So you really want to be thoughtful about who you're selling to, because in times of the pandemic, any company that has been selling to, for example, the restaurant industry or the travel, to some extent even retail, they've really had to rethink. I mean, they have been hit really hard, and they've either had to rethink, can they pivot? Can they do move into other segments, how can they make up for the changes that are happening in that industry segment? So buyers are going to be looking for that in terms of concentration by market or market segment as well. And anything, I think Matt or Mary talked about it. They're going to look for locations and geographies and see whether or not there's anything that's happening there. If you're working in Europe, is there any kind of issues around that, and your customer contracts? They're going to take a look at the contracts and make sure that they all of the terms and conditions are consistent, and that you've got the things in place that you'll be able to transfer, and that the contracts are transferable. That's going to be a key thing, because what you're going to want to do is they're obviously going to want to be able to take those over. So Jackie, you can add.
Yeah, no, and to jump on like the product side too, kind of the big thing that you said is just, which industries, especially, right, economic downturns, global pandemics, these crises that can happen, who are your suppliers? Are they able to stay afloat? Are they going underwater, right? Being able to, as a seller say, okay, I actually can source it from these 3 different places. It's not just one. Inventory. Can you get enough inventory? Because, with COVID, maybe your, manufacturing plant is closed and you're not able to provide enough, although, it's a potentially, an essential piece of product for somebody else, right? So, the one thing that you said, and something that everybody should be aware of, and we did deal with it a little bit in 2008 and 2009, but, how does it trickle down, right? It's not just your end customer. It's, maybe their customer, your customer's customer, and the sustainability of that. So, in terms of the product, that's a big side. And also the other side is, of course, quality, right? I mean, you don't want to buy a company where it's the product or service is just, it's not able to be fixed, right? There's buyers that'll come in and usually, right, that create efficiencies, maybe professionalize things. But, if there's a big quality issue with the product or service, sometimes, and Matt said, that could be a potential non-starter.
Yeah, and they're going to check. I mean, I think the quality issue that ties into the brand and the reputation and retention, and they will check. I mean, and I've talked to investors and to buyers, and they use online services. I mean, your reputation is online. It doesn't take much for them to be able to go see, depending on the industry you're in. You can have Yelp, you can have other industry associations. You've got, in technology, you've got G2, Trust Radius, and these are sites that the buyers go to determine what your reputation is, and that they go there first, and they'll talk to customers. So it's really important. It's important consideration.
No,
Awesome.
absolutely, Jackie. Janine,
Go ahead.
So, yeah, I mean, I think that really leads into the conversation about, what is your brand, right? There's always the great, lines from Warren Buffett, who talks about how when he buys a company, he looks at the brand. When he buys stocks, he looks at brand, and he wants that reputation of, we're a leader. We have this market. This is what we're going for, and he thinks he can grow it. And he's sort of, because of his background, he's sort of the most famous of the long-term buyers, and he really looks at reputation. He looks at what you're doing. I don't know if you guys can hear the siren going by, but I've always found that that's really, really important. What do people think of you? And I think that, and sort of to move on to people, I think, Jackie and Janine, both of you talked about this to an extent, and Jackie, I'd like you to go first on this, but I'd like to talk a little more about, people, what management, the culture, retention, litigation, what are the big issues there?
Yeah, this is a great one, right? And I think that, for me as a buyer, this is one that I kind of put very high on the list. I am looking for a single business to acquire, right? So it's not a strategic. So I will step in as the CEO and run that company. For me, understanding the culture, who the management is, right? It'll be very difficult for me to step into a business where I have a very different cultural, background or mission or understanding than the seller. And it could be just, how we see the future of the company, potentially how we treat people. I mean, it's a little different, right? So, I think that that's something that people do pay attention to, right? I guess another kind of qualitative side, but it does have quantitative repercussions. And, making sure that the management is excited. The last thing you want to do is buy a company and have management, say, kind of fight against you, and they have the relationship with all the other people. So it's, getting an understanding of really who the people are there. And looking at, to go back quickly, like the reviews, what are the customers, what are the employees saying about the business, about the owner, about their bosses, and their peers. And I think that's really something that, is very hard to change, when you buy a company. So it's something that everybody should very much keep an eye on.
No, thank you. I appreciate that, Jackie. And now, kind of to finish up this slide, I think we've talked a lot about product. We've talked a lot about operations. Mary, I know you have a lot of thoughts, but what are the big red flags in assets and IP?
Yeah, and the big red flags that I see, in addition to the seller's failure to properly protect its intellectual property, would be the seller not paying attention to whether it's infringing somebody else's intellectual property. That's very important to buyers. Buyers obviously don't want to come into a company filled with potential lawsuits and litigation. And there's a lot of things, there's the obvious infringements, which are, stealing somebody else's ideas or stealing somebody else's trademark, or, infringing a patent. Those can be obvious. The less obvious ones are the ones that sometimes the deals get hung up on. And those would be, the seller didn't acquire the proper rights from, for instance, its graphic designers who designed its website. They didn't get the proper rights assigned. And then there's a dispute with the website designer. And now suddenly the website designer says, you don't own the copy, you don't own the website, you don't own the copyrights, it belongs to me. And that can be a problem. Some other issues are, when, and everybody has a website now, when a website just copies photographs and things and just takes things from the internet and puts it on a website. Well, a lot of times those copyrights are in the photographs are owned by somebody else. And there's a lot of cases, a lot of issues surrounding that. So that can be an issue as well. And these are issues, they're not insurmountable, but they're issues that a buyer is going to look at and see as red flags. And if there's too many of these issues, a buyer might just say, I just can't deal with this. There's too many potential issues. Another issue that came up in a case recently was the company was a software company, and they were inadvertently selling software to certain embargoed countries that is a violation of federal law. And this was obviously an issue for the buyer. And these are these little issues and things that come up. So it's really important to get a full picture, and it's important for a seller to understand, what are the potential red flags and what are the potential issues, in addition to the obvious ones that they may be aware of. What are some of the underlying issues that can crop up and surprise them that they're not aware of?
Right. So thank you. That was excellent. So the next point, we've sort of been a little bit at the high level here, where we started off on October 7th talking about it's the right time to sell, then the right buyer, then what's the business worth, and today we're talking about what buyers look for. But we haven't really covered the high level of which is the roadmap to getting done. So I'm going to turn it over to Mary and ask her on the next slide to discuss this process of going from October 7th is the right time to sell now to today, and how do we actually close the deal. So Mary, please take it away.
Sure. So first of all, this is our roadmap here. And first, the important thing to note is that this is not a straight line. And often it's not even a curvy line. Often it's a road of switchbacks and, a lot of backward movement and then forward movement. And the structure, the roadmap here is general. It's not a set in stone that it absolutely has to be in this order, but this is typically what we see in a deal and the various steps along the way, starting with the idea. The seller has an idea, hey, I want to sell my business, and starts looking for potential buyers. The buyer has an idea, hey, I want to buy a potential business like Jackie is doing, and I'm going to try to find potential sellers that interest me, that I want to work with. So that's the idea piece. So once there's the idea and the buyer and the seller agree that yes, this is something we want to pursue, the next step is generally an NDA, which is the non-disclosure agreement, where the parties agree with each other that anything they share in connection with the negotiation of the deal is going to be kept confidential and not shared with any third parties. This doesn't mean that the buyer and the seller share absolutely everything they have. And depending on the deal, there may be things that a buyer or a seller want to hold back. And it's really going to depend on the advisors and what the attorneys and the advisors are telling the seller and the buyer. Next, they come up with a price, a negotiation. The seller usually has an idea of what they want to sell the business, and a buyer has an idea what they want to pay for the business. And then there's a negotiation to come up with a price. And a lot of factors, again, go into that, and a lot is going to depend on the motivation of the buyer, the motivation of the seller, the expectations. And after a price is agreed on, there's a letter of intent which is signed, and the letter of intent is just the outline of the deal, the basic high-level terms of the deal, setting forth the major points that the parties have agreed upon, subject to the next step, which is the due diligence and the quality of earnings. And this is really the meat of the deal when, a lot of advisors get involved. There's a lot of investigation that goes on, the due diligence, the documents are reviewed, the financials are reviewed, the intellectual property is reviewed, the assets, the financials, the taxes, and that's really where the deal, the buyer is obviously looking for things that can drive the price down in the due diligence. Like if there's issues, the buyer is going to say, okay, I'll go through with the deal, but there's these issues, so the price is going to go down. And the seller obviously wants everything clean so that the price will not go down. The next step is the financing. A lot of times a buyer is financing the deal, which means now there's a third party that comes into it. The finance company will most likely almost always want to do its own due diligence as well. So now there's 3 parties involved in the due diligence if there's financing. Then it comes to the deal, the document itself, whether it's an asset purchase agreement, stock purchase agreement, merger, whatever the deal structure is going to be. The document is heavily negotiated with the representations and warranties and the structure of the deal and the pricing and the money that's going to be paid, et cetera. Then it goes to closing, which is the end of the deal. That's where everybody comes together and the money's paid and the documents are signed. But that's not the end, because there are usually post-closing issues. Sometimes money is held back for a contingency, such as, some issues that the buyer saw that may give rise to some liability. They may want to hold money back. There can be issues with representations and warranties that were made, and certain other issues that documents may need to be filed outside of the deal itself, depending, if there's property being transferred, if intellectual property is being transferred and things like that. So that's the basic roadmap. And if anybody wants to, any of the other panelists want to jump in on any particular piece of that, I would welcome that, or we can go to general Q&A.
Any panelists? Okay. I'm going to move on to Q&A. Gary, did you have anything from our attendees so far?
Not at the moment, but this is your time, attendees, to put into the chat box, or actually down below. It says Q&A. Just type in your questions, and we'll send it to the appropriate panelists that can answer.
Perfect. So I'm going to circle back now to the question I had on value, and I'm going to ask each of the panelists to kind of talk about it from their perspective. And the question was, does anything change on value between a strategic versus a financial buyer? And also, think about that in terms of how does that feed back into the roadmap we were just discussing as well. So I'm going to ask Matt, I'm going to pick on you first and let you go.
Yeah, I mean, I think that there's definitely differences. I think part of the question is also, what does the seller get back? Sometimes if the seller's if you have a strategic buyer and it's a stock for stock kind of deal, then yeah, it can really matter. If you think I'm going to take my business, which is doing X, I'm going to join it to a much larger business, they have better scale, they have better integration, that can really change it. And so they may, theoretically get less today, but there's more upside. It's a continuation. Financial buyers, a lot of times when you sell it to them, you want max dollars. A lot of times when people say, I want to get $10 million for my business, I don't care who, that's the financial buyer, they don't care. The strategic buyer is saying, I'm going to come in, I'm going to increase your business. And I think that's a big thing of, what comes in, what goes where. I'll hand it off to Jackie if she wants to go next, see if she has any thoughts.
Well, I have a follow-up question for you, Matt, which is on that concept. We've all heard terminology about Section 338 and strategic versus financial buyers maybe doing a stock deal versus an asset deal and how that feeds in to taxes. So, we all know that taxes drives these deals in great part. So if you could just talk a little bit about that, and then we'll certainly let Jackie join in the conversation.
Yeah, I mean, obviously taxes are pretty much the only consideration, as far as I'm concerned. But the big thing is, a lot of buyers want to buy the assets. And the reason is because then you don't get the history of the company. You don't get tax issues. You don't get liabilities. A lot of them don't transfer with the assets. The flip side is that the sellers want to sell the stock because it's generally you pay less tax that way. And frankly, the transaction from a corporate perspective is much easier to do if you buy the stock. You don't have to list all the assets. So the way people get around that, first off, the price is going to vary based on asset versus stock. But what a lot of companies do is they do stock purchases and they make an election under Section 338 of the Internal Revenue Code. And what it allows you to do is, for tax purposes, it's an asset deal. But for ease of documentation, it's a stock purchase. And that really makes it a lot easier. It's the best of both worlds. And that way you kind of get both benefits if that's what you're looking for. And now I'll hand it back off to Jackie. Thank you for that question, Scott.
No, I think Matt did a great job summing this up, right? I think not only you look at strategic or financial, but what are they looking for? What are they looking to do, right? So it's making sure that you're, as a seller, you're asking that question. So no, without being repetitive, it's, Matt did a bang up job. So.
Right. I appreciate that. So the next question is, looking at this roadmap, if you're the seller, where do you involve your different advisors? Where are you bringing in if you're going to use an investment bank, or where does the investment bank or a business broker come in? Where do you start getting the attorneys involved? Where do you start getting, Gary and his team at Markham involved to start doing quality of earnings and things like that? So I don't know. Janine, Gary, Jackie, whoever wants to take it over, go ahead.
I can jump in on that. I mean, this also, right, and I know my answer to everything is it depends, right? But it does depend on your strengths. Buying a business or selling a business is a very big deal, right? You need to make sure that you have advisors around you. I mean, you have fantastic people on this call, and for the idea, the outreach, right? Business brokers are fantastic with being able to help you do all of those things that create value for the business, right? What's your story? What your financials in place? Whether if they have their, somebody to help out with financials on site, or if you go to a third party, right? But they'll package it up and make it look nice, and they'll also reach out to sellers, to buyers for you. For an NDA, just make sure you read it, right? I don't necessarily think you need to spend the money on legal just yet. But, you have to do your due diligence, right? As go through, look at all of these things that we just discussed. And if you think that it's worth going forward, you need to bring in your advisors, right? You need to talk about whether it's the LOI and some of the legal, the legal jargon that's in there, definitely with due diligence and quality of earnings. You can do a little bit yourself to get comfortable. And then once you're comfortable, you need to hire professionals there, right? Financing, there's people that can help you raise debt. You can, go to the bank. So it is extremely important to kind of involve people throughout the process. And especially if you're running a business, right? It helps to have people who know what they're doing.
We did get 2 questions from the audience. First one is, and I'll throw it out there, and Scott, you could choose who should answer it, or someone just raise your hand. How have you seen the timing of the process change during the recent pandemic? I guess from timeline.
Jackie, Matt, Janine, anybody want to talk to that? I have my views, but go ahead.
I'll jump in real quick. It's slower. I think lack of in-person, lack of the ability to travel consistently, but it's definitely happening. I don't know if anyone else has had it. It's slowed down, but I think they're still chugging along. Especially the last 2 months, things have picked up. I don't know if anyone has any more thoughts or comments.
No, I think that's right, Matt. You see people doing this. People have adapted, and they're starting to feel more comfortable working in this kind of a context. And so you're starting to see things happen and move forward.
Okay, great. And the second question is, can you explain the details of the tax rule of the asset sale further versus the stock sale?
Yeah, so I'm just going to jump in on this one. And Janine, I know you're ready to go, but basically, when you sell stock, the default rule is that the seller gets capital gains treatment, which is just at a rate that's generally lower than the ordinary income rate. The max rate is 23.8%, whereas ordinary income is 37%. State taxes tend to be the same, so that's kind of irrelevant. If you sell the assets, the default rule is that everything's ordinary unless it's a capital asset. So obviously the seller is going to pay more. The seller is going to pay more taxes. The other advantage of the buyer is if you buy the assets, you can then depreciate the assets, so you actually recover the cost of your sale at the purchase more quickly. So there's pros and there's cons, and that's why 338s exist to allow. There's 2 different versions, a G and an H10, that allow for the corporate attorney to draft up stock agreements, which I'm sure Scott will agree are much simpler than an asset purchase agreement. And then on the flip side, for tax purposes, you get the benefits, you pay a little more, but you get it back more. Now I suppose I'll hand it back.
Perfect. Thanks, Matt.
We have one more that just came in, Scott, if you don't mind.
Not at all.
The market is better than expected. As a business broker, one of the attendees, he has 5 valuations and 2 listing agreements on his desk. So I don't know if that's a question as much as it's a statement.
Yeah, I think the numbers overall start to bear that out as well when you start looking at the research and the results in terms of, at least I know in terms of some of the VC, there is activity out there, as Matt said. So. And we are getting more comfortable with the way we're working. So things are moving forward.
Awesome. Thank you. Well, I hope all our attendees enjoyed today's discussion. As I said at the beginning, our next session is December 2nd, and we look forward to you attending then, and have a happy Thanksgiving, and everyone stay safe and healthy. Thank you. Bye-bye.
Thank you.
Thanks, guys.
Thanks, everyone.